Good morning and welcome to The Street on BNN Bloomberg. I'm Roger Peterson. Coming up on the show today, Bryden Teich, partner and portfolio manager at Avenue Investment Management, is our guest co-host. And of course, we are keeping an eye on NVIDIA earnings today. Angelo Zeno, senior equity analyst at CFRA Research, will help break it all down for us. And Bay Street executives are sleeping on the streets of Toronto tonight. Mark Aston, the CEO of Covenant House Toronto, will be here to tell us why. And of course, we want to hear from you this morning on First Call. You can reach us with your questions on North American large caps, and we'll have Bryden answer as many of those questions as he can. The number to call will be 1-855-326-6266. We'll open the phone lines in about 30 minutes from now. And our email address is firstcall@bellmedia.ca. Now, some of the stories we're tracking for you in the BNN Bloomberg newsroom. The U.S. ambassador to Canada says Canada and the U.S. have a chance to reach an agreement to reduce tariffs despite last month's diplomatic blow-up. Pete Hoekstra told a conference in Ottawa the talks will resume, though he's not sure when. U.S. President Donald Trump halted negotiations back in October after Ontario Premier Doug Ford ran an anti-tariff ad featuring former U.S. President Ronald Reagan. Canada and the United Arab Emirates have agreed to strengthen their economic partnership after Prime Minister Mark Carney met with officials in Abu Dhabi. Both countries are looking to cut tariffs, remove trade barriers, and expand market access to Canadian exporters. The trade agreement will support Canadian businesses to expand into the UAE across a range of sectors, including engineering, construction, aerospace, agri-food, and seafood. Walmart has increased its outlook for sales in the full year after beating estimates in profit and revenue for its latest quarter. This is the second time Walmart increased its sales outlook during the fiscal year. Walmart reported growth in e-commerce. It is also incorporating AI across its operations and teamed up with OpenAI so shoppers can purchase its products on ChatGPT. And now our top-line story, NVIDIA, the world's most valuable company, showing why, gave a strong revenue forecast for the current period, helping counter concerns that a global surge in AI spending is poised to fizzle. Let's bring in our guest co-host, Bryden Teich, partner and portfolio manager at Avenue Investment Management. Bryden, thanks very much for joining us today.
With you, Roger. Thank you.
I think they're a collective sigh of relief. Is that the best way to sum up this morning right now?
I think as we were saying off the top, definitely from the analyst community, I think, again, a great quarter, great results. I think it's indicative of the continued strength in spending in data centers and chips, and I think there's no slowing down of that. It seems for the time being. I think even having multiple quarters in a row where they've beat expectations, I think the positive reaction from the market this morning, I think, is that, again, they're guiding higher than was previously expected for the following quarter. And so I think at some point that will slow, but at the same time, as long as we're on that path, I think the market cares much more about forward expectations and forward guidance. And as long as the guidance comes in above expectations, I think then the market is has cause to be happy for that.
I just want to look back for a second, though. Were there any numbers of concern? I mean, they beat pretty much, I think, on everything. There was a couple of spots they didn't quite, but any real numbers of concern?
No, nothing really. I think how we're following the space is, I think what matters much more for NVIDIA is the conference calls and the earnings from Meta, Microsoft, Google, and any change in sentiment or discussions about if those companies start cutting back on their capital spending, that would be the most forward-looking indicator of future NVIDIA results are going to be weaker. As long as you're having record quarter-over-quarter capital spending from those companies, essentially, there's no one to supply the chips that NVIDIA supplies, and those are the chips that are needed in all of this capital spending from the Mag 7 companies. So that's sort of what I'm looking for most in future subsequent quarters. But for this quarter with NVIDIA, I think the guide is the most important number, and the fact the guide for the next quarter was higher than expected, I think that's why the market has cause to be celebrating this morning.
It's quite the morning with it and the reactions. Let's bring in some of the notable calls if we can. I just want to get your reaction to some of the notable calls. We were talking about one off-air, but Morgan Stanley raised, Mizuho raised, Susquehanna. And I want to mention the last one we were talking about. Barclays at the bottom said They said this is a truly game-changing technology that will reshape the world economy in the years to come, and there's no turning back on AI now. That's a bold statement.
Yeah, and I think in the moment, that seems like directionally accurate. And I think that, again, the analyst community obviously liked the results and all raised their targets. I think the question isn't, are earnings going to continue to be strong? It's what multiple is the market willing to pay on forward earnings? And I think on the other side, I mean, you're never going to find a negative analyst in an environment like this where a stock is exploding higher because they're not going to be employed for long.
Yeah. And it's a good company too, isn't it?
And it's a great company. NVIDIA is a great company. I think you can't debate that or argue against that now. It would be silly. The question is, and this is sort of lingering out there as we spoke about last week when I was on, is capital spending cycles are cyclical by nature. We are obviously in a huge run-up in capital spending in AI. It will not continue at this pace indefinitely because it just can't. Mathematically, it will have to slow. And so what the market and sort of the more pessimistic view is concerned about is that the cliff on the other side of this capital spending is immense. We don't know where that is. But at the same time, you could be positive on NVIDIA today. But when we get to that cliff, like the market will change its view so quickly. So you can't fall in love with NVIDIA here endlessly forever because this is a cyclical part of the economy now. And the other side of this cliff will be there at some point.
It's where the head needs to come back in and remove the heart, right?
Yes.
How much of a factor is China for NVIDIA?
I think that they've skated through this sort of tariff situation with China and the U.S. well so far. I think obviously, I'm not completely sure where it is right now and what chips are allowed to be exported to China, which ones aren't.
Yeah.
There's some
virtually zero was the number I think Jensen Huang said.
So
our forecast for China is zero.
So I think, again, the delta would be if you have an agreement with the U.S. or if the U.S. comes around to allowing some of these chips to go to China, that would be better for NVIDIA. I mean, I would say that I don't see that as a likely scenario because obviously that is, again, the critical part of what the U.S.'s policy is of not allowing these chips to a foreign actor like China. So I think it's right for NVIDIA to say, assume zero in China. Because you can't go lower than zero. You can't go negative. So I think that they're guiding right and they're lowering expectations because they don't know and they're facing the uncertainty that many companies are. What is the relationship going to be with China going forward? None of us know. Okay,
and we're seeing a reaction this morning. What are we going to see when the markets actually open? I mean, around the world, we've already seen the numbers go up. We're going to look at those in just a sec. But what can we expect today?
Well, the thing I'll be watching for in the next week is, does NVIDIA go back or take out the high? So it made its high a couple weeks ago. It's below that. It's up today. The market as well made a high a couple weeks ago. And can this reignite another surge to new highs? Or does this move fail? And then if it does, with this kind of positive sentiment and positive fundamentals, you're in what feels like a topping. If we can't now make a new high, we are in a topping. And so that's something we'll be watching for the next week or so.
All right, we're going to end it there, Brad. We'll take a look now, coming up at the markets just before the bell. Busy morning this morning, so let's get through the markets very quickly here. Taking a look at the U.S. futures, of course, reacting to the NVIDIA earnings up across the board. The Nasdaq leading the way up by 1.77%. And Asia happy with what they saw there, with the exception of the CSI 300. But you can see the Nikkei up 2.65% at one point. It was up more than 4%. And Hang Seng just about a wash for the day. Over in Europe, similar situation. People reacting to NVIDIA. You can see it's all in the green right across the board. And the TSX yesterday, it was reacting to the expectation that NVIDIA would be good, so it ended up 0.59%. Let's take a look at some of the movers. MDA Space up 5.5%, G Mining 5.37%, going the other way. Bausch Health down 1.96%, and Allied Properties off by 2.27%. And looking at gold again, and the metals, about a wash for gold right now, still above 4,000, up 0.13, silver up 0.25, still near record territory, a little below it. Copper, it is up 0.22 right now. And last but not least, oil taking a hit, up by 3% yesterday. The Western Canadian and south of the border, the WTI, it's up back above 60. It's up 0.99%. Okay, we're going to head south of the border again after that long delay. The September U.S. job numbers are coming out today. With more on the significance, let's bring back in Bryden Teich, partner and portfolio manager at Avenue Investment Management. Bryden, the numbers, it's a weird group of numbers we're looking at, isn't it? Like what we're reacting to and what we're going to see.
And I think the nature, as we were saying before, the nature of how stale these numbers are, I think the market is very likely to look through them. Mm-hmm. I think the October numbers, which we should be getting soon, but we're not.
These are September numbers we're going to be seeing.
These are September, right? So completely irrelevant.
Yeah.
I think the concern is that the October numbers were weaker. Some challenger layoffs in October were higher. The labor market is clearly slowing, and I think that there was concern that October might have even been like a negative number or flat, because the White House had essentially said, we might never even show you that number. So if it's a bad number, of course they'd want to say we're not showing it to you. But the way BLS has organized the data releases, I think they're not releasing that number until mid-December, essentially the week before Christmas. So it's a weird environment for the data. And as we were saying before, it makes the Fed's job very hard now into the December meeting, because you kind of can't see what's going on. And I think it raises the impetus for them to do nothing, at least until into the new year. But then by then you'll have most likely nominated a new Fed chair. So it's not even going to be Jay Powell's term anymore. So it's kind of complicated, to say the least.
And does it matter that they're holding off on the numbers till December, or is there enough information out there that the market kind of knows what to expect for it, and the fact we've had this gap? Yeah,
I think that the market has so far digested this slowing employment situation well. And I think, again, things like NVIDIA or the AI cycle has been such a driver of the market that the market has looked past the fact the economy is sort of stalling out or slowing down. There will be a point in the future where if we do get a month or two of job losses, the market will not like that, because it'll mean recession, it'll mean earnings will be lower. That still feels like it could be a quarter or two out. But I think, and even if the Fed cuts or doesn't cut at the next meeting, I don't think that really matters. Like, what matters is what we're talking about off the beginning is, what are these tech companies' earnings? What is guidance on AI spending? That's really driving the economy right now. And I think anything else is sort of the second fiddle to that. But the data, I think the market will look through today, because it's, as we said, it's so stale.
Yeah, and for a cut, I know Trump has been pushing for a cut, but we're going to wait for the Fed's going to do what it's going to do on this, isn't it?
Yeah, I think the other thing too, which what we've started talking about this and sort of refreshing people's minds about, is cuts are good while your economy is still expanding, but there will be a point in this cutting cycle where cuts aren't good, because they're cutting because the economy's bad, and the market won't like that. So we're in this period where the market and sort of strategists are talking about cuts or no cuts, hoping for cuts. But there'll be a point where cuts aren't a good thing, because they're happening because the economy's slowing. Yeah. And we're what feels like approaching that moment. I don't know if it's here or into the new year. But again, the Fed, whether they move 25 basis points or 50, it kind of doesn't matter. The question is, even if they were to go 50, they probably would then pause. So you're 25 or 50 away. It's not going to move the needle on the economy. I think the concern is that they're behind the curve with the labor market, which is slowing. Yeah. And that's sort of the long variable legs of monetary policy. Okay, we'll leave it at that. Coming up next, our colleagues at Bloomberg TV had an exclusive interview with NVIDIA CEO Jensen Huang. I'll bring you that after this. NVIDIA CEO Jensen Huang said the sales of Blackwell is off the charts during an exclusive interview with Bloomberg's Ed Ludlow. Take a listen.
I said sales are off the charts for Blackwell, and NVIDIA GPUs in the cloud are sold out. We got plenty of Blackwells to sell you. We have lots of Blackwells coming. We're making a lot of Blackwells, and we have a bunch of Vera Rubins coming. And so business is very, very strong, but we've planned our supply chain incredibly well. We have the largest supply chain in the world. Our partners, TSMC, our memory partners, SK Hynix, Micron, Samsung, are doing a fantastic job supporting us. And all of our systems partners, Foxconn and Quanta and Wistron, our packaging partners, everybody's doing a fantastic job supporting us. And we've done a good job planning for a very, very strong year. And we've done a good job planning for Vera Rubin. So sales are off the charts. NVIDIA GPUs in the cloud is sold out, but we've got a bunch of Blackwells to sell.
Jensen, what's the road ahead for Vera Rubin? It's one of the most common questions we get for you of how that ramp will go relative to what we saw with the Blackwell generations.
Well, the silicon for Vera Rubin, 7 different chips are back in our labs. And the bring up is happening across engineering teams. Probably a couple of 20,000 people are working on bringing up Vera Rubin. From silicon to systems to software to algorithms, people are working around the clock, and this bring up is going beautifully. We're on track to deliver Vera Rubin about Q3 timeframe of next year, continuing our once a year cycle. Vera Rubin is already assured a huge success. Everybody's incredibly excited about it. Can't wait to show everybody. And then one last thing is that the rack architecture, the rack scale architecture is completely revolutionary. It includes a scale up switch called the NVLink. NVLink 72, our 5th generation, is the only one of its kind in the world. This rack architecture, which is incredibly complex, started with Grace Blackwell, then Grace Blackwell Ultra. It is transition to Grace Blackwell Ultra is incredibly seamless. The same rack scale architecture is going to be used for Vera Rubin. And so the supply chain is all used to it. This complexity that we enjoyed with Grace Blackwell transition, we're now incredibly smooth running. And so I think Vera Rubin is going to be just really smooth, and we're going to ramp it really hard.
Jensen, I tried to go through what the CFO Colette Kress said about China. In the quarter gone, it seemed like there was not meaningful H20 sales because the demand wasn't there, even if you were permitted to sell H20. And then in the current period and going forward, NVIDIA seems committed to working with both the United States and China to sell what Colette called more competitive compute. Where do we stand with that? And could you just clarify what Colette was talking about in the current state of play for China?
The most important thing she said is that we've said for some time now, our forecast for China is 0. All of our forecast guidance that we showed, 0. We should start. That's the most important thing that she said. She also said that effectively China is a very important market to us. It's very important to the United States. It's very important to China. We would love the opportunity to be able to re-engage the Chinese market with excellent products that we deliver and to be able to compete globally. The Chinese market is very large. This year, my guess is probably about $50 billion. It's great for the American people that we're able to compete in the Chinese market. It's great for the China market that we're able to provide NVIDIA's technology to them. It's great for the rest of the world as Chinese software companies and Chinese open source models leave China and are used all over the world. And so I think it's fantastic that it would be fantastic if we're able to participate in the China market. But for now, we should just assume our NVIDIA's forecast for China market is 0. We're going to continue to engage the U.S. government, continue to engage the China government to advise them and to encourage them to allow us to go back and compete in the open market. And so until then, we should assume 0.
Jensen, during the call, the U.S. Commerce Department issued a statement saying that you are now permitted to export up to 35,000 Blackwell chips each to both Saudi's Humane and to the UAE through G42. But there are some requirements that the U.S. has of you, in particular around controls of preventing tech transfer to China through the Middle East. What can you tell us about your understanding of what the US government's asking of you there?
That element has been around for a long time, is to prevent diversion. Of course, over the years, people have speculated about diversion. We've chased down every single concern, and we've repeatedly tested and sampled data centers around the world and found no diversion. And so this is an area that will continue to be rigorous on, and there's a lot of different ways to comply, and one of them, of course, is to have it be run by American cloud. Another way is just to make sure that we have measures put in place, whether technology or processes, to ensure that no diversion happens.
Jensen, the number one question I get for you is always about energy. How severe is the energy shortage in the context of AI expansion? And would you talk a bit about power and whether power is a bigger constraint for this build out than the chips themselves?
When you're growing at the rate and scale of NVIDIA, remember we're growing some 60% a year. Just quarter to quarter growth of our company is $10 billion. We grew an entire size of a company just in one quarter. And so the scale and the rate at which we're growing, everything's a challenge, which is the reason why NVIDIA has to be world-class at our supply chain, working with incredible providers and suppliers like TSMC and the memory partners and all of our systems partners, but also working downstream to work with energy providers, power generator companies, all of the land, power, and shell providers, so that we could make sure that as we launch into the marketplace, as we deploy into the marketplace, land, power, and shell will be ready for us. One of our great advantages is that we have such a large network of go-to-market. We're in every single cloud. Every single cloud service provider is a customer of ours. We're in every single GPU cloud. And so we have a large network, and not to mention OEMs, not to mention all around the world. Our customer base, our network of partners is so large that we will find nooks and crannies of power in large scale, medium scale, small scale, in different parts of the world. And so this is a huge advantage of ours. And it stems from the fact, Ed, that NVIDIA's architecture literally runs every model. And yesterday, we announced a big news with Anthropic. And so now the premier frontier models, OpenAI, Anthropic, xAI, Gemini, all the open sources, biological models, physical AI models, everything in the world runs on NVIDIA. And as a result of that, irrespective of which cloud provider you are, it is fantastic that we can deploy in your cloud because the offtake will be incredible.
Jensen, we can see where the hyperscalers are getting the money where they have the money to deploy and build. But you mentioned Anthropic. With Anthropic, or indeed OpenAI, they have tens of billions of dollars of commitments around the world. Very simple, like how do you know that OpenAI is good for it, that it will be able to find the money?
Well, we're thoughtful, along with OpenAI, thoughtful in aligning on and taking into consideration visibility of demand and their financing capabilities. All of that has to be in accordance, has to be aligned, has to be coherent before we start to build out. And so I think the ambition's large, but the execution is disciplined. And that's really, really important to recognize. We're very disciplined with our investment. We're disciplined with our build out. These are very large scale investments. And so the two teams are quite disciplined, very disciplined in thinking through the investment levels. Now, it's also important to take a step back and realize that OpenAI, Anthropic, these are the fastest growing company in the history of humanity. Their offtake, their end market demand is absolutely real and absolutely incredible. And you could see that they're really struggling to keep up with the demand. that they have. The engineering teams, we work incredibly hard to make sure that we bring them on more capacity, but also optimizing their stack so that the usage of whatever capacity is as efficient as possible. And meanwhile, there's so many new use cases that they want to put out into the world, and it's currently limited by the capacity they have. And so this is a really important time. You're seeing an exponential growth in the amount of compute demand necessary for AI. You're seeing an exponential growth of adoption and use of AI, and the number of applications that are going to be using these AI is also growing. And so we've got to do our best to support the scaling out of two of the most consequential companies in history, and we're delighted to be partnered with them.
And that was NVIDIA's CEO. Still to come, we'll continue our conversation about NVIDIA's third quarter. We'll break it down with you with Angelo Zeno as well. Our phone lines will open soon for our first call segment. You can reach us 1-855-326-6266 or send us an email at firstcall@bellmedia.ca. The U.S. ambassador to Canada says Canada and the U.S. have a chance to reach an agreement to reduce tariffs despite last month's diplomatic blow-up. Ambassador Pete Hoekstra told a conference in Ottawa the talks will resume, though he's not sure when. U.S. President Donald Trump, of course, halted negotiations in October after Ontario Premier Doug Ford ran an anti-tariff ad featuring former U.S. President Ronald Reagan. Canada and the United Arab Emirates have agreed to strengthen their economic partnership after Prime Minister Mark Carney met with officials in Abu Dhabi. Both countries are looking to cut tariffs, remove trade barriers, and expand market access to Canadian exporters. The trade agreement will support Canadian businesses to expand into the UAE across a range of sectors, including engineering, construction, aerospace, agri-food, and seafood. Shares of Warner are getting a lift in the pre-market after fourth quarter revenues beat estimates. Warner Music also resolved a lawsuit with Udio and established a clear framework for developing Udio's licensed AI music creation service, which is set to launch in 2026. The new platform will allow fans to create remixes using Udio's library of participating artists' voices and Warner's music library. And a quick look at the markets, all in the green right now over the NVIDIA news, and that will likely carry into the trading day as well. All right, NVIDIA is what everybody is talking about, including us, and it reported stronger than expected third quarter revenue and profits, easing concerns about an AI bubble. NVIDIA makes the chips that are crucial for AI data centers. Let's get more now from Angelo Zeno, a senior equity analyst at CFRA. Angelo, thank you very much for joining us.
Thanks for having me.
I guess initial reaction to the numbers that we saw, they beat the analysts' expectations. Are we surprised at that?
Yeah, I mean, I didn't think there was much question into whether or not you were going to see a beat and raise. I think the question was by what magnitude, and we saw them beat. I think our numbers by about $1 billion, street numbers by about $2 billion for the October quarter. More importantly, they guided for the January quarter about $3 to $4 billion above our expectations. So it was really a good beat and overall good results from our perspective. Also, the margins is something that was something that investors were going to closely monitor, just given the promises that NVIDIA made earlier in this year, expecting margin expansion throughout the fiscal year. And we did get that. We got 73.6% here for the October quarter, guided towards 75% for the January quarter. We were a little closer to 74.5%. So margin expansion story is looking very nicely. And I think more importantly, they're expecting sustained margins here going into their next year. So, also important towards that profitability story.
Hi, Angelo. Thanks for being with us. We had just listened to a conversation or interview that Jensen had given yesterday, and I think one of the things he talked about is how where there was concern earlier in the year that there was a shortage of chips for the increased demand that they were seeing. But he was now very confident that there are a lot of Blackwell. He's also very excited about their next phase of chips and the rollout of that. Can you speak to maybe the confidence or your view of the duration of this cycle, and that the fact that they've got their next chips ready to go, from what it sounds like, into the beginning of next year?
Yeah, no, that's a great question. So, the constraints earlier this year, late last year, largely, from Blackwell, had to do with the fact that this was a new architecture, and it was a shift towards these large-scale rack solutions, and something that NVIDIA had never done. The entire semiconductor ecosystem, hardware supply chain, nothing that they've ever done to this extent. So, a testament to them that this is they were able to kind of execute as well as they did, and we're now seeing that ramp really take fold here. And why you saw the partly the upside that we saw. As you go into calendar 2026, Rubin will launch by, we think, mid next year, which is their next generation GPU. Rubin is based on the same architecture as Blackwell. Shouldn't be any sort of delays or hiccups, we think, from the Rubin launch. There might be other issues that we've got to contend with, maybe supply chain bottlenecks or energy bottlenecks. For instance. But that being said, as far as NVIDIA's ecosystem themselves, they should be kind of, there shouldn't be any issues as far as 2026 is concerned. And we know the demand is there from the cloud providers, just given what we saw out of Q3 earnings season. So the visibility, at least we think over the next 12 to 18 months, is extremely strong.
Now, Wang was asked about the power supply, and he kind of answered but danced around a little bit. Is that a legitimate concern, and could that upset the table a little bit?
I think it's a legitimate concern in the sense that we're actually seeing more and more cases of where we're getting these shells, these data centers built, and it's in some instances it's taking a little bit longer than expected to actually get the supply or the energy to actually get into those shells. To what extent we're going to see further delays going through 2026 and 2027 remains to be seen. How much support do we get from the administration in terms of helping to provide additional energy support? Something that the Altmans and the even Jensens of the world have basically commented on. Also remains to be seen. But there are constraints at this moment in time, especially in certain pockets of the United States. And if it ends up being more severe than we anticipate, what could potentially happen is you could see an environment where certain hyperscalers or customers potentially delay certain purchases, because there's no way that these guys can spend as much as they are and sit on a full shell here where they're not getting the energy. And if it's sitting like that for 3 to 6 months, it's costing them significant revenue, especially when you're going to have a next gen chip roll out 12 months thereafter. So all stuff to kind of take into account. But it is an issue. It is a growing issue, and hopefully it's something that's going to be manageable here.
Angelo, another question on one of the topics that's been discussed is essentially the depreciation of these chips and the duration, and what degree should they be depreciated. And if we're going from Blackwell to the next series already, have you given any thought to what you think depreciation curves should look like for these hyperscalers that are spending all this money? And is any of that sort of in flux right now with sort of the next sequence of chip coming out?
Yeah, I mean, a good question. I mean, the way we actually look at this is, these customers probably are being a little bit more aggressive than they should be in terms of the accounting of these GPUs. What I would say is, in an ideal world, you would want to see some sort of an accelerated depreciation where they're taking more of that depreciation up front, less so in future years, to better match the actual revenue trajectory that they're getting from these GPUs. Now, that being said, when you look at the hyperscalers and what they've got in their system, they continue to sell or rent out capacity for Hopper, which was their last chip. They actually, in some instances, are also they continue to sell their Ampere chips, which was initially launched, I think, in 2019. So you're talking about 5-6 years ago. Okay. So from that perspective, they are generating revenue, and given that we are in a supply-constrained environment, I don't necessarily think it's a huge issue at this point. But I do think they are being a bit aggressive.
Okay, we're going to have to end it there, unfortunately, Angelo. There's lots of other questions we could ask you, but thank you for joining us.
All right, thanks for having me.
Angelo Zeno is a senior equity analyst at CFRA. Still ahead tonight, about 100 Bay Street executives will be sleeping on the street. It's to raise money and awareness for youth homelessness. We'll get more about that after this. Our phone lines, of course, are open. Bryden Teich is taking your questions on North American large caps. You can call us at 1-855-326-6266 or email us at firstcall@bellmedia.ca. Covenant House Toronto is hosting its annual Sleep Out. Top Bay Street executives will be ditching their warm beds to sleep on the streets as an act of solidarity and to raise money and awareness for youth experiencing homelessness and sex trafficking. Here to tell us more about it is Mark Aston, the CEO of Covenant House Toronto. Mark, thanks very much for joining us today. We appreciate it.
Oh, thank you for having me on, Roger.
How important is it that you get executives and the C-suites involved in this?
It's really critical. I mean, this event is about raising awareness of the issue of youth homelessness in our city. And that's done by engaging business leaders from across Toronto who can not only raise the profile of the issue, but also bring in some critically needed funds for the emergency and winter services that Covenant House needs to provide to young people this winter.
Mark, I'm wondering if you could touch a little bit on just sort of the history of this event. And obviously, it's been very long running, and there's sort of a great background and duration that you've been doing this. But maybe speak on the origin of it, if you can, and just sort of the history of it as a very important event for Bay Street.
Sure. I mean, this event has been running about 13 years now. And it has raised almost $15 million during that time period. This year, we have a target of $1.2 million, and there are about 70 Bay Street executives who will be sleeping out with us this year. And as I said, it raises critical funds to support young people who have nowhere else to go this winter, who are facing homelessness and trafficking. So there's a really illustrious history here of Bay Street getting behind a really important issue in this city.
I have a friend of mine who's been doing it for a few years now, Andy Taylor, and for the ones that have been doing this for some time now, what do they take back after this night? What do they do with it when it comes to going back to their own businesses, their companies, and things like that?
Yeah, I mean, there are two components to this event. The first is you're in the house, right, immersed in what Covenant House does, learning about the programs. You have the opportunity to meet with young people. And that's about 3-4 hours. And then you head out to the sleep site for your date with the pavement, where you're not going to do much sleeping for 6-7 hours. So you really get a chance to reflect on how terrible the issue of youth homelessness is. And so what I have heard from people over the years who have participated, often multiple years in a row, is that it has really personally impacted them and changed their perceptions of the issue of homelessness and really given them the motivation and determination to help young people in our city. So, that's what we're hoping for this year as well, to make a real impact on the 70 participants who are sleeping out with us.
Mark, one of the things you also highlighted was just not only the long history of the event, but also the large sum of money that has been donated over the years. And so for this year or for ongoing years, where are some of the needs most for Covenant House, and how has some of that donation money been invested, and what are some of the positive impacts that have come from that?
Yeah, I mean it has been invested primarily in crisis and emergency services during the winter period, and that would include everything from shelter to warm, nutritious meals to access to health care, specialized health care often for young people who are challenged with mental health or addiction issues. And really building the type of supportive community around young people, so that they can move out of shelter again and move back into the community. So the proceeds from the event have supported a very wide range of services that have really helped young people transform their lives.
Okay, Mark, thank you very much for joining us with this great cause. We appreciate it.
Thank you so much for having me on. Mark
Aston is the CEO of Covenant House Toronto. When we come back, Bryden will take your questions on First Call. Time now for First Call and first email, and it comes from Gus. It says, "Hi, Bryden. Can I please have your thoughts on CTCA?"
Sure. So thanks for the email, Gus, and for the question. Canadian Tire is obviously a retail business that Canadians know very well. I think they've had pretty solid results in the last couple of quarters, given the fact that the economy has slowed and there's concerns about the weakness or relative strength of the consumer. I think it's the essential nature of a lot of Canadian Tire's segments that drive the consistency and the profitability for the business. It's not one that we own. We have another way that we play or invest in our retail in a more specific way. But the one part of the Canadian Tire business, which I think always is the stalwart, is the auto part.
And tools.
And tools. And as
from experience.
As any Canadian knows, you're now into winter season. And obviously the auto parts is a critical part of their business, and quarter after quarter they put up really good results. So it's not a business that we own. It's one that we keep on our list and we do look at. But I think that they've had pretty good results for the last couple of quarters, given the fact that the economy's been a bit soft on the consumer side.
All right. And full disclosure, I don't own any Canadian Tire shares, but I have lots of Canadian Tire stuff, though. Okay. Another email from Dave. It says, "Can I get your guest's opinion on Go Easy?"
Thanks for the question, Dave. So Go Easy had results in the last quarter a couple of weeks ago, which I think were a bit weaker. I think the concern always for a business like Go Easy is there's this cliff of a credit cycle, and what does it do to their lending business? And that's been sort of the fear or the theme for a couple of years, and the shares had performed really well out of COVID. But I think we're now into the slowing of the credit cycle where the concerns about that will linger, and then that will suppress the multiple that investors are willing to pay for the stock. So I don't think it's necessarily a catastrophic credit cycle for them. But at the same time, I don't see a catalyst in this kind of environment where we're in this sort of stall speed economy. So it's one that we would be on the sidelines for, but I think it's been a great business and a long-term investment has done well, but I think we have concerns over the short term.
At the moment, just sit back for a bit.
Yeah.
Okay. We're going to get in another email. This one's from Kevin. "Could I get your guest's opinion on BlackRock? Is this a good time to buy?"
So thanks for the question, Kevin. So BlackRock, as everyone knows, is sort of one of the largest asset managers in the world. They've obviously been a huge benefactor of this move into passive investing, and they've done a really good job of diversifying their business. They're doing all kinds of different parts of the investment landscape they're in. It's a business that we owned maybe 5 or 6 years ago. We owned it for a couple of years. I think the challenge we had is that for the asset management space, there's definitely a fee compression going on in the industry, and so it was a business that we looked at and we didn't think that it had a lot of pricing power embedded in it. And so that's one of the characteristics we're always looking for, is a business that can grow and slowly raise prices over time. Whereas BlackRock, although they're a dominant player, I think you're getting fee compression over time. And so that kind of dynamic on pricing power is something we don't find that attractive. But it's a great business. The shares have done reasonably well. And as long as the markets are up, I think the shares will do well. And it very much trades one-to-one with what the stock market's doing. And so if you have a down market, obviously BlackRock's going to get hit as well, because that then means lower fees on their assets.
Anything similar to BlackRock that you're liking?
Nothing in that space right now. We've periodically owned different parts of the financial services sector. The one sector that we like within that right now is property and casualty insurance. We think that's, with interest rates being higher, interest income is up, and we think that part of the cycle is good for the P&C companies. So that's sort of where we've been focusing on our financial exposure.
Okay, let's get in another email. This one's from Mike. With the recent dip in the stock Cargojet, does Bryden see this as a buying opportunity? Had good earnings too, didn't it?
Hi, Mike. Thanks for the question. So Cargojet was one we owned 6 or 7 years ago. We owned it through COVID. And then what we got concerned about in 2021 and 2022 was that they were starting to add capacity at a very large scale. And there was a period of time where, if you remember, you couldn't get PPE, and Cargojet was flying planes to China to get, on behalf of the government, to get that PPE. And what happened was pricing power for their overnight cargo got extreme, where they were making so much. It was almost like NVIDIA, where you could just charge whatever. And essentially you had a huge run up in profits. But then the capacity that they were adding hit the market, and then pricing power came off. And so now you're dealing with, more sort of run-of-the-mill economy. That capital has been invested in the business. I think they're earning a lower return on that reinvested capital. So we think it's not one that we're necessarily in right now.
Okay. We're going to leave it on that note there. Bryden, thanks as always for joining us.
My pleasure, Roger.
Bryden Teich is a partner and portfolio manager at Avenue Investment Management as our guest host today. And Andy Bell is up next with the Open, and the markets will open about 32 minutes, 25 seconds from now.